In the world of trading, where split-second decisions can make or break fortunes, one tool stands out as a beacon of insight: the trend line. You must have the trend line in your toolkit to master trading. Trend lines serve as graphical instruments utilized within technical analysis to visually depict the trajectory and vigor of a trend within a financial market. Typically plotted on price charts, they connect two or more significant price junctures, such as troughs or peaks, utilizing a straight line. Trend lines are used when the market is trending and can be used for support and resistance in this case. Uptrend lines. These lines are established by linking consecutive higher lows within an ascending market trend, signaling an overall upward price movement over time. Downtrend lines. Conversely, downtrend lines are constructed by joining consecutive lower highs within a descending market trend, indicating an overall downward price movement over time. Traders leverage trend lines to ascertain the general direction of the market, aiding in trading decision-making processes. As prices approach a trend line, traders often seek indications such as rebounds from the trend line or breakthroughs, assisting in identifying potential entry or exit points.